Income taxes are payments made by individuals and businesses to the government. This money is collected at the federal level and in most states. Income taxes are a major source of funding for public services. These services include things like roads, schools, and national defense. Understanding income taxes can seem complicated. However, breaking down the basics can make the process clearer. This guide will explain key concepts like tax brackets, deductions, and deadlines. But before we continue, if you like this video, please remember to share it with your friends, hit the like button, subscribe to the channel, and then watch some more of our videos. Taxes are the lifeblood of a functioning society. They provide the financial fuel for essential services that we often take for granted. Imagine a world without well-maintained roads, quality education, or a robust defense system. That's what life would be like without taxes. Our tax dollars contribute to these vital areas, ensuring a better quality of life for everyone. From funding public transportation to supporting scientific research, taxes play a crucial role in shaping a prosperous and secure future. One of the first things to grasp about income taxes is the concept of tax brackets. Tax brackets are essentially the ranges of income that are taxed at particular rates. Understanding how these brackets work is crucial for effective financial planning and tax management. These brackets determine the percentage of your income you owe in taxes. For instance, if you fall into a higher tax bracket, a larger portion of your income will be taxed at a higher rate. However, it's important to note that not all your income is taxed at that higher rate. The U.S. tax system uses a progressive tax system. This means that as your income increases, the rate at which you are taxed also increases. This system is designed to ensure that those who earn more contribute a fairer share to the nation's revenue. This means higher earners pay a larger percentage of their income in taxes. For example, someone earning $50,000 a year might be in a lower tax bracket compared to someone earning $200,000 a year. The higher earner will pay a higher percentage on the income that falls into the higher bracket. Each tax bracket has a specific income range and corresponding tax rate. These ranges are set by the government and can change from year to year based on economic conditions and policy decisions. As your income increases and moves into a higher bracket, only the portion of your income within that bracket is taxed at the higher rate. For example, if you move from a 12% bracket to a 22% bracket, only the income above the 12% threshold is taxed at 22%. This ensures fairness and prevents excessive tax burdens on lower income levels. By understanding how tax brackets work, you can better plan your finances, make informed decisions, and potentially reduce your tax liability through strategic financial planning. Let's illustrate how tax brackets work with a simplified example. Understanding tax brackets can be a bit confusing, but breaking it down step by step makes it easier to grasp. Suppose there are 3 tax brackets: 10% for incomes up to $10,000. This means that if you earn up to $10,000, you will be taxed at a rate of 10% on that portion of your income. The next bracket is 15% for incomes between $10,001 and $50,000. So if your income falls within this range, you will be taxed at 15% on the amount that exceeds $10,000 but is less than $50,000. Finally, the highest bracket in this example is 20% for incomes above $50,000. This means any income you earn over $50,000 will be taxed at a rate of 20%. If your taxable income is $60,000, you won't pay 20% on the entire amount. Instead, your income will be divided into the different brackets. You'd pay 10% on the first $10,000, which amounts to $1,000 in taxes for that portion. Then, you'd pay 15% on the amount between $10,001 and $50,000. This means you would pay 15% on $40,000, which equals $6,000 in taxes for that portion. Finally, you'd pay 20% on the amount above $50,000. In this case, that would be 20% on $10,000, which equals $2,000 in taxes for that portion. Adding these amounts together, your total tax would be $9,000. This tiered system ensures that taxes are levied proportionally based on income, making it fairer for everyone. By understanding how each portion of your income is taxed differently, you can better plan your finances and make informed decisions about your earnings and investments. Section 5. Common tax deductions. This section is crucial for anyone looking to reduce their taxable income and save money. Tax deductions are a valuable tool that can significantly reduce your taxable income. By understanding and utilizing these deductions, you can lower the amount of income that is subject to taxation, ultimately saving you money. They are specific expenses that the IRS allows you to subtract from your total income. These deductions can range from everyday expenses to more significant financial commitments. This process lowers the amount of money subject to taxation. Common deductions include several categories that can benefit a wide range of taxpayers. Standard deduction. A fixed amount you can deduct based on your filing status. This is the simplest deduction and is available to all taxpayers, making it a popular choice. Itemized deductions allow you to list specific expenses like medical costs, charitable donations, or state and local taxes. This option can be more beneficial if your deductible expenses exceed the standard deduction. Home ownership deductions include mortgage interest and property taxes. These deductions can be substantial, especially for new homeowners or those with significant mortgage interest. Education deductions cover expenses like student loan interest or tuition. These deductions can help ease the financial burden of higher education and make it more affordable. Understanding these deductions can help you maximize your tax savings. By taking the time to learn about and apply these deductions, you can ensure that you are not overpaying on your taxes and are keeping more of your hard-earned money. Section 6. Claiming deductions, itemizing versus standard deduction. When filing your taxes, you have a choice between taking the standard deduction or itemizing your deductions. The standard deduction is a fixed amount that varies depending on your filing status, such as single, married filing jointly, or head of household. Itemizing deductions allows you to list specific eligible expenses. You'll want to calculate which option provides the greater tax benefit. If your itemized deductions exceed the standard deduction, itemizing is usually more advantageous. Section 7. Important tax deadlines. Meeting tax deadlines is crucial to avoid penalties. Mark your calendars with these important dates. April 15th, the deadline for filing your federal income tax return. October 15th, the extension deadline for filing your federal income tax return. State tax deadlines vary by state, so check with your state's tax agency. Remember, these dates are subject to change, so confirm with the IRS or a tax professional. Filing on time ensures you fulfill your tax obligations. Section 8. Tips for a smooth tax season. Tax season doesn't have to be stressful. Here are some tips to make it smoother. Gather your documents early. This includes W-2s, 1099s, and receipts for deductions. Consider using tax software. It can help you avoid errors and find deductions. Don't hesitate to seek professional help. A tax advisor can provide personalized guidance. File electronically. E-filing is faster and more secure than paper filing. By being organized and informed, you can navigate tax season with confidence. Section 9. Conclusion. Taking control of your taxes. Income taxes are a vital part of our financial system. While they can seem complex, understanding the fundamentals empowers you to manage your taxes effectively. Familiarize yourself with tax brackets, explore potential deductions, and stay informed about deadlines. By taking a proactive approach, you can simplify the process and minimize your tax liability. Remember, knowledge is key when it comes to navigating the world of income taxes. Disclaimer: I am not a financial advisor. I do not provide investment, tax, legal, or accounting advice. This material has been prepared for entertainment purposes only, and is not intended to provide, and should not be relied on for investment, tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. If you liked this video, please share it with your friends, hit the like button, subscribe to the channel, and watch more of our great videos. Thanks for watching.